Boom! What's going on, Investomaniacs? Your boy Knight Rider here. Today we're going to be talking a little bit about the banks and immigrant detention centers and for-profit prisons, stuff like that. Bank of America recently announced its latest capital return plan, which will return $37 billion back to shareholders. Bank of America will raise its quarterly dividend by 20% to 18 cents per share. Additionally, over the next year, Bank of America plans to repurchase $30 billion worth of shares, in addition to the $0.9 billion of share repurchases to offset the increase in shares from its stock-based employee compensation plan. This payout is 42% higher than last year's capital return plan, so a big jump in payout there. And this is the largest Bank of America payout over a 12-month period. Bank of America is also the latest American corporate giant who announced they would no longer be investing into companies who run private prisons or immigrant detention centers after a review from the bank's Environmental, Social, and Governance Board. But really, that just means shareholders didn't like it. This news caused shares to decrease by 4% apiece for GEO Group and CoreCivic, which are two major contractors for border shelters and private prison providers. They aren't the only major financial institution to cut ties. Others include JPMorgan Chase and Wells Fargo, who both recently broke ties with the private prison industry amid protests of bank leadership encouraging for prison, which kind of makes sense if you're investing in it, right? Also, keep in mind that Senator Elizabeth Warren presented her plan to eliminate private prisons altogether, which would obviously be bad news for those companies. News on Wells Fargo. Principal Financial Group has purchased Wells Fargo's institutional retirement and trust business, which manages $827 billion in assets, for $1.2 billion, and it would be financed with cash and debt. Principal said Monday it is beginning the integration of Wells Fargo's 401k, pension, executive deferred compensation, employee stock ownership plans, and asset advice businesses. They also plan to appoint many Wells Fargo executives to its retirement leadership team and will also keep locations open in North Carolina, Texas, Minnesota, and the Philippines. Wells Fargo also released their latest capital return plan, which will increase its third quarter 2019 dividend to 51 cents per share, at least for common stock, up from 45 cents per share, obviously provided it is approved by Wells Fargo's board of directors. The plan also includes common stock repurchases of up to $23.1 billion for the fourth quarter period. The Federal Reserve said all major U.S. banks passed the central bank's annual stress test, which resulted in JPMorgan shares popping more than 2%. JPMorgan's latest capital return plan will raise its dividend by 13% to 90 cents per share. The bank also can repurchase up to $29.4 billion in stock under the new plan, compared to $20.7 billion last year. Some interesting news from JPMorgan Chase analysts. The U.S. and China have agreed, at least temporarily, to a ceasefire not to escalate trade tensions, which, according to JPMorgan, should result in market optimism for at least a few months. And considering my portfolio is 100% long, hopefully that's true. Additionally, new estimates from JPMorgan revealed passive investments control about 60% of equity assets, while quantitative funds make up a whopping 20% of market share. The banks are cheap. You can buy Bank of America or Wells Fargo. They're both good buys. However, personally, I like JPMorgan the best. JPMorgan is a world-class CEO, which will continue to give JPMorgan a bright future relative to its peers. And at 12 times earnings with a 2.84% dividend, it is an easy value buy. I would not recommend GEO Group or CoreCivic. There's just too much risk in the current political environment. Hey guys, I really appreciate the likes, comments, and subscribes. Hope you guys have a great day.